Hey, it's Clay Trader, and this will be a video chart on ticker symbol AMRS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past 2 days broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. I did do this analysis yesterday, so that's where these red and green lines are coming from. And want to just get things updated here as the chart continues to create an interesting setup. And that whole setup revolves around this green line right here that we'll call right around the 32-cent mark, give or take a little bit. If you're curious on why this is a pretty historic level, then just go back in the video archive and watch the video I did from May 5th. But if you want to just take my word for it, there's a lot of price history down here around the 32-cent mark. So it makes perfect sense why the price is at least going sideways right now. Now, don't get me wrong, I wish charting was this easy and trading was this easy where I could say, well, just because the price is going sideways at a level of support, it is absolutely 110% guaranteed to bounce tomorrow. I'm not saying that at all. Now, would I be shocked to see some sort of attempted move to the upside? In other words, maybe even just a dead cat bounce? No, I would not be shocked at all to see a bounce, but nobody can sit here and make a guarantee because guarantees just don't exist, in the market. So far so good. Price is going sideways at that level. And, for those of you that are good with stop losses and honoring, risk and all that sort of stuff, then this truly does provide an interesting opportunity where risk can be minimized. But if the things go your way, there could be quite a bit of upside potential. Now, if you have a hard time honoring stop losses and all that stuff, then, these are definitely not the setups for you. But if you are disciplined, then I'm sure you already kind of recognize exactly what I'm getting at with this setup. In the event the price does start to bounce off this 32-cent area, give or take a little bit, as far as levels of resistance are concerned, key one being right up here at 39 cents. After 39 cents, it's all about the purple line there, which is the famous 50-period simple moving average. I realize that line's quite a bit of a ways up there, but keyword there being moving. So as time goes by, this line is going to continue to move its way downwards and get more and more relevant. So on any sort of bounce, 39 cents. And the 50-period simple moving average is going to be the levels to keep an eye on. So quite an interesting setup. Will it bounce? Will it not? We shall see. But like I said, if you're good at managing risk, honoring stop loss is definitely one to keep an eye on.
One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.